Okay, let's just forget about Bitcoin's crazy price swings for a second. We're going to dive into a much deeper concept today. It's digital gold moat. It's a powerful idea that totally reframes how we should think about its real, fundamental value. For most people, Bitcoin is just that price ticker on the screen, right? It jumps up, it crashes down. But let's just push all of that aside. We're going to look under the hood, at the actual structure that holds it all together. So let's start with this provocative question. What if that the daily price is actually the least interesting thing about Bitcoin? Focusing on that is like staring at a single wave and completely missing the power of the entire ocean. That's what we're doing here today. We're looking at the ocean. Now, the core idea we're exploring comes from a classic business concept. It's something legendary investors like Warren Buffett have used for decades to identify the world's most unbeatable companies. It's called the economic moat. So what is an economic moat? Well, picture an invisible fortress around a castle. It's this durable, powerful advantage that makes a company almost impossible for competitors to attack. It really is the secret sauce for long-term dominance. And this comparison here, this really brings it home. Think about a financial giant like S&P Global. Their moat? They became the trusted global standard for financial ratings. Well, the argument is that Bitcoin is pulling the exact same move, but for digital value. It's building a global monopoly of trust in security. So how is this moat actually built? It's not just one thing. It's a combination of a few different layers all working together. And one of them? Well, it's unlike anything else out there. Okay, so first you have what you could call the social layers. These are pretty easy to grasp. A powerful, globally recognized brand, and a network that gets more and more valuable with every new person who joins. But then you have this third, technical layer, something the source material calls a physics moat. And that's because it's built on unchangeable, hard-coded rules, almost like the laws of physics, but for a digital asset. The engine that powers this physics moat is called Decentralized Proof-of-Work. Now, this isn't just some techie feature. It is the very mechanism that provides this immense security and literally locks the system's rules in place, making them almost impossible to ever change. So how does this work in plain English? Just imagine a constant global competition. All around the world, super powerful computers called miners are burning a massive amount of real-world energy to be the first to solve a complex math puzzle. The winner gets to add the next block of transactions to the permanent record. And because it costs so much to win, it becomes outrageously expensive for anyone to cheat. That's how you create trust and security without a middleman. And here's the absolute kicker. That whole proof-of-work system hard codes an absolutely fixed supply. There will only ever be 21 million Bitcoin. That's it. Full stop. It's a certainty that's literally grounded in math and physics, and that's something no competitor can just copy and get the same level of trust. Okay, that's a really powerful theory, right? But is there any hard evidence that this moat is actually getting wider and deeper over time? Well, let's take a look at the data. First, let's look at the hash rate. The easiest way to think about this is as the total security budget protecting the network. And just look at this growth. It's not just a line on a chart. This represents a colossal, real-world investment in the integrity and security of the entire system. It has absolutely exploded. Then, of course, you've got the network effect in action. The number of active wallets just keeps climbing, pulling in everyone from those first early adopters all the way to the current wave of massive institutions. And you know how this works. Every single new person that joins makes the whole network that much stronger and more valuable for everyone else. And it's not just about how many users there are. It's about their behavior. We're seeing huge institutions buying Bitcoin and just holding on for the long term. It's a strategy they call hodling in the crypto space. They're treating it like a strategic reserve asset, not some quick trade. That signals deep, deep conviction. So let's put all these pieces together. You have this widening moat, this growing conviction. How does all this define a completely new role for Bitcoin in our digital economy? Well, when you combine a global brand, a massive network, and this unchangeable, incredibly secure foundation, you get what's being called the pristine collateral of the digital economy. It's essentially becoming the most trusted, bedrock asset that new digital financial systems can be built on top of. This all creates this incredibly powerful feedback loop. The more people that use it, the stronger the network gets. This makes it harder and harder for anyone to even consider an alternative. The search cost, as they call it, just becomes way too high. And all of that just reinforces Bitcoin's status as the one clear standard, making its moat wider and deeper every single day.
So you see, when we shift our focus away from the price and onto the security, away from speculation and onto the structure, a completely different picture emerges. We see an asset whose competitive advantage is literally compounding over time. And that leaves us with one final, fascinating question to chew on. What happens when the world slowly starts to agree on a new digital standard for value?